Hi YouTube, please give me a moment while I connect to Facebook. We'll be getting started shortly here. And I think we should be live on Facebook. What's up everybody? Hope you're doing well. I'm Sami Abasad with T3 Live. Welcome to the Strategic Swing Trader. We're going to be talking about the market and then we'll go over the swing ideas for tomorrow. Before we start, as always, a standard required disclaimer to let you know that trading is risky and that this video is for educational purposes only. So make sure to agree to that before proceeding with today's video. If you'd like to download a copy of my free ebook and you're new to the channel, please click the link in the description below. But without further ado, let's go ahead and get started. Let's talk about the charts. Let's see what we can find for tomorrow. And if you find benefit in today's video, I'd appreciate it if you hit the like button. And thanks for doing that in advance. If you have any questions for us, reach out to customer service, info@t3live.com. Again, info@t3live.com. So here we go. We got the daily chart of the Qs. You know, I look at the Qs mostly because it's dominated by the biggest companies in the country. Apple, Microsoft, Google, Amazon, you know, Tesla. Not that these companies are not in the S&P 500. They are. But those are the leading companies and they make up about 50% of the Qs. So that's the market to me. But you can look at the SPY. It's basically almost the same as the Qs, and the same with the IWM. Very similar picture. But at any rate, if we look at the Qs here, we had the break of the uptrend back in, I don't know, a few weeks ago. We had the break of the uptrend. So the uptrend on the daily chart is completely broken. We have a downtrend now. We have a lower high. That's a lower high. And then when we broke under the prior low, that's a lower low. So we have a downtrend. We have a declining 20. No reason to be bullish, basically. Okay, so hold that thought for just a second. What happened on the hourly chart over here, that rounding bottom, was pretty bullish. We don't like to have a rounding bottom. We like to have a V bottom if we're going to continue to be bearish, okay? And then if you look at the weekly chart, well, it triggered a buy setup. Now, is the 20 MA on the weekly chart, the blue line, pointing up? Not really. So it's not a very good weekly buy setup either. So we have conflicting messages. We have a weekly buy setup that I think triggered last week. I'll double check. Triggers means, you know, it took out the prior week's high. So 307.22 was the prior week's high. And then, I mean, 2 weeks ago. And then last week was 307.60. So it technically triggered for sure on the weekly. We have a daily downtrend. Okay. And we have we have a bullish hourly, a bullish looking weekly, and a still bearish downtrending daily. What's the bias going forward? We don't know. Nobody knows. You have to wait and see. So do we get a red bar here and trigger the sell setup? Then I'd be bearish. Do we continue higher and, you know, maybe, you know, I'm just, you know, coming up with scenarios. Do we continue higher and break or challenge this pivot, which I think is unlikely. But if it does, it'd be a very, very bullish move. So we have to wait and see. We have conflicting time frames. The weekly is bullish, the hourly is bullish, the daily is coming into the area of the declining 20 and is in a downtrend that's bearish. So we just have to wait and see what happens. If we get a sell setup, I'll be bearish. I'll be bearish again. If we continue higher and really challenge the downtrend, maybe break the downtrend, that would be really bullish. But I'm not predicting any scenario. The most logical scenario is we don't drop for the next couple days until the Fed announcement on Wednesday. Okay, so Monday, Tuesday, we either put in green bars or doji bars, and then on Wednesday we drop. Why do I say we drop? Because we have a downtrend on the daily chart, but I don't know for sure. So we have to wait and see, okay? I did go back to 2007 through 2009, and then a couple months ago I went back to the tech bubble, and I looked at the way the market operated. It's operating in a similar fashion right now, but it's not, this crash hasn't been so much, I mean, it hasn't been a real crash. We've had some pretty bullish moments during the last 9 months. we've had some, I mean, this was really bullish, and then we had this really bullish move. Now we're putting in another small bullish move. So this wasn't a continuous bearish market like you would expect from a normal crash. Okay, so I've always thought this was gonna be a prolonged thing. It wasn't gonna get resolved quickly, because mainly because the Fed's hands are tied, but all meaning their tools are of no. I mean, they don't have that many tools left to be able to fix the problem, and but I've always, so I've always thought this was gonna take a while, and normally you hope as a trader that you get just one big drop or one big move up, not this back and forth. But this is what we're getting right now, and we have to adapt and see it for what it is. So this is the picture of the whole, the whole year basically. So downtrend from the get-go, and then the huge pop, another big drop, and then a huge rounding bottom on the daily chart of the Qs right here, which led to a very nice uptrend that ended when the weekly sell setup triggered over here, and now we have a small rally back towards that declining 20, and that's where we're at today. So interesting times. If I were to make a prediction, lower still, okay, lower still, but it's a little tricky because of the conflicting time frames. All right, so we talked about the market. I told you my thoughts. Feel free to formulate your own opinion. Don't always follow somebody else, but I just this video is to share with you my thoughts. Now on to the ideas for next week. We have I'm gonna raise the volume just a little bit here, just in case it's slow. We have I posted the list in the description, and I started to post the entire watch list, unless it's incredibly long, but I started to post in the description of the video my entire watch list, as opposed to just the ideas that I think are, that I'm about to go over with you. So check it out. You have the entire watch list for tomorrow posted in the description. We have AGIO 123 pattern on the daily chart. So long over 34.76, stop under 33.26. Beautiful, but I don't like it when the first bar is really huge. I like it when the initial igniting bar is about 2 times the average size bar. I would say that's about 3, maybe 4 times the average size bar. Okay, so that's the only issue, but I do like it. ALLK is trying to transition on the daily chart. The initial pop was sold a little bit, which is negative. That's not a good thing. You want to see it hold. But if we look at the hourly chart, it's looking pretty healthy. The consolidation, reclaiming the 20 is pointing up, so that looks healthy to me. Long over the base, which is I think 515, stop under this bar's low. I don't know what the low is, so let's check together. About 417. So it's a $1 stop. Target could be 10, could be, who knows, it could be huge. The stock has been basing for a long time. All right, CIEN is more of an hourly base breakout. See the hourly base, so long over the base, stop under it on a very extended sell-off. So it's an overextended sell-off, and then an hourly base breakout. So long over the base, stop under. It's not my favorite, but it looks nice. MOMO is a China stock that's been basing and has that transition A breakout on the daily chart. So long over the base, stop under it, and maybe target around 650, 660, 670 is where the resistance is if we were to zoom out right there. See it? So it's about 670 maybe. So that's why I think target for it should be around 650. MRTX, I played it. I called it in the newsletter, and it got to target. I don't remember. Was it in 3 days basically? So I played it long right here over the base, long, boom. Then second day doji bar, and then the third day, boom. Popped and got to target. And ever since then, it's been just super bullish. Since the bottom here, it's more than doubled. And now, still looks higher. I like it over the 1, 2, 3. One can use the doji bar's low as a stop. But if you think but it's a little sloppy. And if you want to hold it long term, I would use, I think, was it $77 as a stop, and then target the 200 MA on the weekly chart, about 125. Let's just say 110. Okay, so that's my idea on the MRTX. Long over 86.70, stop either under 82.86 or give it to $77 as a long-term play. Okay, Netflix and PayPal both have weekly buy setups, but both are a little bit iffy. They will work marvelously if the market ends up going higher over the coming days and weeks. They will probably won't work as well. They'll probably fail if the market drops, since overall I think the market will continue to drop. So it's a tough call for me. But look at the PayPal weekly, it looks even better than Netflix. So where's the entry? Just over that week's high, last week's high. Stop is also under, so over 96.40 by 89.79. Netflix is the same exact idea. So same exact setup, I mean. Over 234, let's just call it 234, stop under 214.69, and target resistance up here. That it's gonna, Netflix, PayPal are market stocks. They're gonna need the market. RGTI is like the CIEN. Remember we went over the CIEN, that climactic drop almost, and then same exact thing on the hourly chart. It's an hourly base breakout. So over the base long, stop under it, and then target where it came from, where it fell from, about 350 or so. Okay, and then SMTC I like a lot. It had a big gap down on earnings about a week and a half ago, and now has a base breakout. So over the base long, stop under the base right here, and then target has plenty of room to about 45 bucks. The gap fill and the declining 20 on the daily chart. So SMTC I like. SPWR, we know solar's been very, very bullish, is another solar stock. It's like the AGIO in that you have the initial igniting bar, you have the small bar. It's not a doji bar, but you have a small bar, and in this case we have two small bars. So this is called a 1, 2, 3, 4 pattern. 1 is the igniting bar, 2, 3 are the narrow range bars, and then 4 you will get it if the stock triggers and takes out the last, makes a new high, takes out the highs from bars 2 and 3. So that will be the trigger bar. That will be the entry bar. When I say a trigger bar, I mean entry bar. So long, stop. I like it. So those are the favorite bullish watches for tomorrow, or the ones that I think are most ready. Here is my long, very, very long bearish watches. Check it out, okay? You ready? It's very, very long. One item. Crazy. The one item, PYPD. Which is a base breakdown, so under 106, so 104, let's just say, stop I would say over 135, so it's about a 30 cents, 32 cent stop. One can use, what's this bar's high? That's 25, so can also use 25 as a stop instead of 35. Honestly, 25 is good enough. So under 105 by 25, so now it's a 20 cent stop. The smaller the stop, the bigger the share size. Okay, and the higher the reward to risk once you exit, and if it works out, it'll be the higher the reward to risk. So I like tighter stops a lot. So that's the only bearish item that I have right now. All right, everybody, hope you enjoyed today's video, and if you have and found benefit in it, please be sure to hit the like button and subscribe to our channel if you haven't already. If you have any questions, reach out by emailing info@t3live.com. Thank you so much. I'm Sami Abu Saad with T3 Live. Good trading, everybody. Take care.